Welcome back to At the Market. I'm Peter Olesker, and I'm here with At Properties co-founders and co-CEOs, Mike Golden, Thad Wong. It's hard to believe, but it's already October. It's been a wild year, and home buyers and sellers want to hear from the two of you about what's in store for the rest of the year. So welcome back. How are you?
Good, Peter. Thank you.
Doing great, Peter. Thanks for having us.
Of course. Well, before we talk about real estate, I want to talk about one of your favorite subjects, and that is
Art.
love.
Oh, surprise.
Love and art, actually.
Yes.
So we're here in the Goose Island headquarters of At Properties, and if you drove by this building a couple of weeks ago, you probably would have just kept driving. There was a blank brick wall. Now, if you drive by the building along Chicago Avenue, chances are you're going to do a double take.
Yeah.
It's pretty cool. So Thad, do you want to talk about this project and what we've done here?
Yeah, it's pretty cool. So we were working on a collaboration with a fairly famous local muralist lefty out there. And when we were doing it, he had mentioned the desire to someday put together one of the largest murals in the city. And we were sitting in the Goose Island office. I was thinking about the south-facing wall that we just finished tuck pointing and offered that as an option. And he loved it. He looked at the outside, and I said there was only one condition. You have to incorporate our love logo into your design. And so he presented this first option, and it was awesome. So right now we're working on getting it illuminated, so at nighttime we'll be able to share the love with everybody, same way we do all day.
Yeah, it's really cool, and I think it's worth the trip down here wherever you live. If you're anywhere in Chicagoland or if you're visiting Chicago, if you can't make it down here, it's on social media. Chicago Tribune did a great story about it, so check it out. It's really cool.
Yeah.
Well, let's talk about real estate. So on the last show, we talked about love. We talked about whether it would be a summer of love for home buyers and sellers, and for many it was. But the last episode we did, two of our managers, Jim Barcelona and Trisha Roberto, came on, and they said that the market had reached an inflection point, that finally we were starting to see supply tick up after a long decline, and that the number of transactions, the number of closed transactions was finally on its way down, perhaps indicating that demand had peaked. So Mike, I want to start with you and get your impressions. Is that what's happening in the market? Is that an accurate depiction?
I mean, depending on how you look at it, sure, you could describe the market that way. If you look at what's happened over the last year and a half, definitely we're starting to see a little more supply, and we're starting to see the number of units tick down, the closed units tick down. But it's all really relatively speaking. So when you take a look at what happened over the last year, and the end of 2020, we had a fall market that was much more like a spring market. So we basically had a spring market, and then we had another spring market. So basically the markets are just evolving to a little bit more normalcy, a little bit more cyclical normalcy that we normally see in a year, but we're still far outpacing where we've been the last few years. If you look at 2018, 2019, our 2021 numbers and continued trends are far above where we were before. So like I said, if you look at it in a very short period of time, I'd say that's a correct way to look at it. But in reality, we're still in a much hotter market than we've been in the fall and years.
Thad, would you agree with that assessment?
I agree with it, when you look at it mathematically, but I also want to remind everybody we were number 20 on the top 20 Case-Shiller index for price increases. So we are by far the most affordable city, and we didn't have as much of a rise as even cities like Minneapolis. So although people are feeling like our market could be overheated, as a percentage of income, we're an incredibly affordable spot to live in America.
Well, pricing, that's a great segue into my next question. We talked about supply and demand. There's a third measure that I wanted to ask you about, and that is median price. And it's showing, we'll put this graph up on the screen, that median prices are coming down. That's not unusual during the second half of the year, but the decline is more pronounced this fall than it was last fall. Median price in September was 8.3% below its June peak, versus last fall, the peak to trough difference was only about 4.9%. So Mike, what do you make of this data?
I think it goes back to some of our prior comments. In the last 18 months has just not been a typical cyclical type year. We experienced such strong momentum in the fall last year as I said, it felt more like a spring market. So we just didn't have much of a dip last fall because there was so much demand. People were coming out of COVID, they were moving, and they were really trying to find their new home, and we just didn't have that normal cyclicality. So this year, I think you're seeing just a little more normalcy. Again, if you look at the chart, you see even the trough is still far higher than even where some of the peaks have been over the last few years. So the market just feels still incredibly strong and solid. And as Thad noted, like, we are not overheated from a price standpoint. So if you even look at the pricing change, again, to really understand it, you've got to dig into exactly what's really selling right now, because it certainly doesn't feel like prices are falling in our market at all.
Thad, from a practical standpoint, if you're a buyer or a seller, how much attention should you be paying to this trend line?
Oh, I think it's important if you're a seller, because what we always see from sellers is that they're looking at the most recent sale and they often price beyond that. And these days, what we've learned over the last 18 months is that if you're priced over the market, you are going to be corrected by the market, meaning that housing that is overpriced from the beginning sells at about 91%. Versus right now, properties that are listed at market are selling at price with almost no price reduction. So being overly zealous and overestimating the momentum of the market is a big mistake right now. So I would just recommend working with an agent and seeing exactly what else has not only closed, but what else is available.
And if you're a buyer, do you have an opportunity to take advantage of a dip, if you would say that there is a dip even?
I don't think there's going to be a dip, but what I think you can always do is take advantage of October, November, December. And I think sellers can take advantage of authentic buyers that are really ready to pull the trigger during that period of time. But right now, I would say, is a great time to buy. And I don't think that we'll have an increase in pricing that's incredible at the next spring market. I feel like we've seen our run up in prices. We're going to have a very stable, gradual increase. We might at the beginning of next year see another 6%, but it'll taper off over the summer and come down in the fall as it usually does.
Last episode, we did a deep dive on the suburbs. So I wanted to ask you guys about the city and two bellwether markets that we talk about a lot, but they're important. So the first is Lincoln Park single-family homes. And this year, through the first 8 months, there were more single-family home sales in Lincoln Park than there were in all of 2020. The average price on those sales is about 20% higher than it was last year. And the average price is sitting now at about $2 million for a single-family home in Lincoln Park. Thad, point blank, is the Lincoln Park single-family market overheated?
I don't think so. Let's remember that people that bought new construction homes in 2007 are selling them for about or almost what they paid today. So remember, that's 14 years. So we had a very modest increase decline for a period of time. And right now, we still have not surpassed that 2006 market. So I do not think Lincoln Park is overpriced. And if somebody is affluent, meaning that they can afford effectively to live in any neighborhood they want in the city, when you look at Lincoln Park, you look at crime, safety, schools, proximity to the lake, transportation infrastructure, commercial infrastructure. That is the number one place to live if all of those things are really important to you. Now, that's not going to speak to the entire market, but the majority of people would love to live there if they could afford it. And I don't think that's going to change. I don't think that's going to change whether crime increases or crime decreases.
Okay. Mike, anything to add on top of that?
The only other dynamic I'd add is some of the pricing gets a little skewed because there's a lot of new homes being built in Lincoln Park. Price of new construction is way up, so people are paying more because it costs more to build a home. And the amount of money people are putting into some of these homes. Some of these people are building pretty opulent homes in Lincoln Park. That alone can drag up some of the average pricing because it's not like we have hundreds and hundreds of houses that are selling. It's a little bit of a smaller subgroup. So when you start to see people building bigger homes and putting more money into them, and the fact that just construction costs are just up. I mean, it's hard to get supplies, it's hard to get appliances to some extent sometimes. So people are paying more for a lot of these things, which is naturally going to drive the price up, particularly of new homes.
And if you look at condos super closely in Lincoln Park, even if they're on Halsted, a major thoroughfare, or Webster, a little bit less busy, they're selling quickly at record prices. So anybody that can get a 2-bedroom or a 3-bedroom or any space with parking, it's getting sold very quickly.
Okay. Well, let's talk about condos in another neighborhood, condos in Near North. Now, 2020 was a rough year for sellers in particular in the condo market in near North, Gold Coast, River North, Streeterville. But the market has gotten better. We've seen supply go from 14 months down to 8. And year to date, total units sold are up 57% over 2020. Perhaps even more significantly, they're up about 25% over 2019. In any other year, if we were seeing 25% increase in transaction activity, that would be front page news. In the pandemic, it seems like it's just another one of these stats that we gloss over. But the bad news is average price is basically even with last year, and it's down pretty significantly from 2019. So Mike, are you ready to be a condo buyer in near North today?
I don't know if we'll ever see, or at least in the next few years, see a better time to buy a condo in near North. If you are thinking about wanting to buy a condo, particularly in a high-rise, luxury high-rise in the near North, Streeterville, Gold Coast area, this is the time to do it. Beyond the fact that interest rates are as low as we've ever seen them, we keep saying historically low, but they are historically low. There's still some fear bleeding out of the marketplace from COVID, and we're still experiencing some crime issues in the city, which make people nervous, particularly in the Streeterville area over the last year or so. So I just don't think there's going to be a better time, because I do believe that all those things will get better. I think that we will clean up some of the issues we have to in the city, and I do believe that a lot of the fear will bleed out. So if you want to move into that area, there's no better time than right now.
Thad?
Yeah, I couldn't agree more. At some point, leadership is going to stand up in Chicago and make a difference. And they will know that the tax dollars generated in these communities, also through not just property, but retail, is essential for the growth of our city. And density is essential for the growth of our city. And in order to drive those two things, you have to have safety. So there will be measures put into place. I'm incredibly confident that will have consequences and that will improve the safety in our city, that will allow us to continue to grow. And I do think buyers that are buying now at today's prices are going to see that bump up of improvement in the city in the coming 2 to 5 years.
And yet, if you go down to Rush Street on any weekend, every single one of those tables in the street is filled. People are walking around. A lot of people have jumped in. Just the numbers alone bear that out.
And early in the morning, you can see it. I take a walk through the Gold Coast home in the morning, and you can see people are out there, they're exercising. But you got to remember, right now, we say 8 months, wow, of inventory. That's great. Average, or what a good stable market is, about 4.5. So there's still a ton of inventory out there that will not allow for prices to increase too rapidly. So that's why I would say there's a great opportunity to buy right now because of the supply.
Well, what do you guys make about the rental market and how that's impacting these neighborhoods? Mike?
Well, obviously, rents are way up. It was interesting, when COVID hit, a lot of people moved out of the city, people moved back home because of the fear, and no one knew what was going to happen. We're seeing such a massive resurgence in the rental market. Rents are up. Rental buildings are full, and there's a little bit of a gap on deliveries of new rental buildings. So there's tremendous demand for rentals. So yeah, when you start looking at it, rents are up so high, and again, you're borrowing at sub 3% right now. So it's so inexpensive to buy, it's cheaper to own than to rent. And I think people are also realizing that having a little more stability, a little more control over their own destiny as they see their rents keep jacking up every year makes a big difference. So I think that the rental market, without a doubt, is helping drive the for sale condo market.
Well, maybe the hottest segment of the market right now is second homes. Since May 2020, we've seen unprecedented activity in Lake Geneva, in Harbor Country, and on the Indiana shoreline. A little over a year ago, I asked you guys how long this could sustain, and you said about 18 months. So that would take us right into the start of the new year. Mike, a lot of second home buyers are making their move in the fall to set them up for a spring, summer of the following year. Do you think this fall is the last hurrah for the second home market?
No, actually I don't. I think the second home market is going to continue to have a lot of strength in it. I don't think it'll be quite as crazy as it was maybe over the last 12 to 18 months. But I think with some of the COVID issues continuing in our world, with people still not traveling the way that they were before, not spending money on sort of lavish vacations, more and more people are looking at second homes as a big-time viable long-term alternative. So while I think we all thought when we talked 18 or 14 months ago that it would run about 18 months, I think we all thought we'd sort of be over a lot of the a lot of the quarantining and the masking and the constraints that we're under, but obviously that has not really fallen off, and I don't really foresee that it's going to fall off anytime soon. So I think that that market will continue to be strong. Again, not quite as crazy as it was, but continue to be strong for potentially another year to year and a half.
Thad, do you agree?
I agree. I think that, shelter in place was such a first for all of us that having an option out there that you can also enjoy when there is not a pandemic is going to be a new phenomenon, because we've all experienced something for the first time. So new home buyers and new families that are affluent enough to have a second home, I think they'll choose that. They're going to be able to enjoy it just like everybody else who had one, but it'll always be in the back of their mind that I've got somewhere to go outside of the city if there's ever a shelter in place that I can enjoy every day. And also I think that from a pricing perspective, there's not a lot of sellers and there's not a lot of inventory. I just scoured the whole Harbor Country area looking at homes for a friend, and there was so little on the market, I was dumbfounded. There were so few options that there's still an inventory crisis out there.
Yeah, well, that was my next question, which you answered. But the inventory crisis, and then let's talk about pricing. I mean, pricing is on an incredible run in these areas. In Berrien County, which is New Buffalo, Union Pier, Lakeside, 5 of the first 6 months of 2021, the average price was up over 33% compared to the year earlier. 33% was the smallest increase. Some months prices were up 50%. Right. So you talk about an inventory crisis. Is there an affordability crisis brewing in these towns?
That's like a bigger global issue when it comes to America and a lot of other places, is the issues with income inequality. And the truth is the wealthy are getting incredibly wealthy right now at a disproportionate scale. So I don't think there's an issue with price, because that segment of the population that can actually own a second home is getting incredibly wealthy right now. And because of interest rates and the stock market increasing and cryptocurrency, new inventions, you're seeing the wealthy only get wealthier at an astronomical rate.
Wrapping up, looking back a year ago, there was a ton of uncertainty heading into the fall. It's incredible to think about how much has changed in a year. And yet, in real estate, as in everything else, we're always focused on the here and now, what to be hopeful about, what to be apprehensive about. So give us a little perspective. What are your key takeaways for the rest of 2021? Thad?
I would say in a world right now where people feel like they can't count on a lot, you can count on the real estate market for the next couple of years. Every indicator that is showing is saying that this is going to be one of the most stable markets out there, and one of the most, I don't want to say it's riskless, but there's very, very little risk. If you're a seller and you haven't sold and you're looking to sell right now in Chicago doesn't see run up in prices. You don't see 10, 15, 17% run up in prices ever. So if you're able to capitalize on that, you can't feel bad that you didn't sell in June of 2021 at the absolute peak. You got to feel as good as you did when you sold a stock at 95% of its value, of its high value. So I think it's a great market to be a buyer, because you're still getting in at a very affordable city with low rates. And if you're a seller, you got to feel great that you didn't sell before COVID.
Okay. Mike, key takeaway?
I guess I'd say similar. I just think there's still a lot of upside for both buyers, particularly for buyers over the long haul, because of the interest rates, and because the city will continue to appreciate, the suburbs will continue to appreciate. Really, we are just catching up. When you look at where we were for 10 years, particularly in the suburban markets, we were depressed and prices didn't move. As Thad said, a lot of the pricing now is still at 2007 levels. I mean, 14 years in your level, it's a great time still to be buying, and you're locking in at interest rates that are, they really just can't go any lower from where we're at right now. And I agree with you. With regards to being a seller, you've done really well. You've seen a nice uptick. If you want to move. It's a great time to sell your home. Might it be better in a year or 2 years? Might be, but it's still a great opportunity, especially if you're going to buy something else, to be able to lock in at these rates. So I think it's win-win all the way around.
Thad, Mike, thanks for another great year. Home buyers and sellers, good luck to you in the fall. Remember to reach out to your @properties agent if you have any questions, and we'll see you next time at the market.